We are continuing the same chapter, basic accounting terms. We will see which are the other terms. See, we already discussed the term expenditure, the classification. We discussed capital and revenue expenditure. I forgot to tell you one term there. I mean, there is one more classification under expenditure other than your capital and revenue expenditure. You just include this term also there after your capital and revenue expenditure. You need to write one more, that is deferred revenue expenditure. Usually you will be getting question like what is deferred revenue expenditure. Other than asking the classification for expenditure, specifically they will ask this term, what is deferred revenue expenditure. Okay, deferred means delayed or in future. That's related to future, delayed or future. So again there is the term revenue expenditure. So it is also a type of revenue expenditure, but it is delayed in nature. We will take one example and see. Advertisement expense is a deferred revenue expenditure. Suppose in the first year, that means 2020 we are starting the business, and the first year you spent an amount of rupees 1 lakh as part of advertisement. Why we are spending on advertisement? To increase sales, to promote sales. It's a promotion technique. So in the first year we spent rupees 1 lakh. Can you earn income in the first year itself? Will you get income or will you get revenue in the first year itself? Sometimes yes, but usually that will not happen. Suppose you are spending only this year, in the very first year itself your sales will not increase. Seeing your advertisement, everyone will not come to buy your product. That might not happen. It can happen also, but usually it will not happen. So this will take a time period of more than 1 year. So though it is revenue expenditure means benefit will get exhausted or will get the benefit in the first year itself. But though it is revenue expenditure, the nature is not completely revenue, because the benefit will not be earned in the first year. It will be spread over a period of more than 1 year. So that will be earned, I mean the income will be earned in the coming years. In 21, 22, 23 you will be earning income on the amount which you spent today. So that is called deferred revenue. It is delayed. The revenue you will be getting only in the coming years. So that is called deferred or delayed. Understood? You need not write it as delayed. I just gave you that word delayed for you to understand. You must write it as deferred itself. It's deferred revenue expenditure. And deferred revenue expenditure is an example of one term that we discussed in the beginning of this chapter, that is fictitious asset. You remember this term, fictitious asset, that came under classification of assets. Fictitious assets means neither tangible nor intangible. Then basically they are losses but not written off in the year in which they are incurred, but in more than one accounting year. The same meaning you can write for deferred revenue expenditure also, because this is an example of fictitious asset. What you spend today, this year itself will not get the income on that. It will be spread over a period of more than 1 year. In the coming years you will be getting income on that, and such losses will not be written in the first year. In the coming years it will be spread over the coming years. That is all about deferred revenue expenditure. So just include the term under this expenditure. After that we discussed the meaning of expense, which is similar to revenue expenditure. Now we will discuss the classification of expense. Expense we have two types, that is prepaid expense and the other one is outstanding expense. Okay, prepaid. The name itself says the meaning. It is paid in advance. Like we know that the financial year starts from 1st April and it ends on 31st of March. Suppose you paid insurance premium on 1st October 2017 or 2019, you take 2019, and it is paid for 1 year. So this will be paid till 1st October 2020. Understood? That's for 1 year you are paying. Now we know that the financial year starts with 1st April. For this particular financial year, it will start with 1st April 2019 and it ends on 31st March 2020. That will be next year. Understood? This is the financial year, and this transaction or this premium you paid in between the financial year. Just see the dates. We started on 1st April 2019. That's the beginning of the year. That's the financial year starting. And when did you start paying insurance? 1st October 2019. That means after some months in October you paid the insurance premium, but that you paid for 1 year. That means till next year 2020 October, till that time you paid the amount, but the year ending is on 31st March. 31st March 2020, this date will come before this October 2020, isn't it? So the financial year will end before this October, but we have the firm paid the insurance premium till next October. Means how many months insurance premium you would have paid in advance? How will you compute that? Actually this year will end on 31st March, so you need to pay, if you are planning to pay only for this year, you had to stop with 31st March. But you pay till next October means you have paid something in advance. How many months? How will you start counting? 31st March is the year ending, so you have to start counting from April. April means April of 2020. Understood? From the very next month you will start counting. So April, since it is 31st March, March will not be counted. If it was 1st March, you can count March also. Okay, now 31st March means you will start counting from the next month, that is April 2020. April, then May. So similarly you will count till October. So April, May, June, July, August, September, October also you can count if it was 31st of October. But here it is October 1st, so October cannot be included. So what will be the time period? It is April, May, June, July, August, September. So for 6 months you have paid in advance. That is called prepaid. That is paid in advance. This is the example you can write. I hope you all understood that. Understood? What is the meaning here? This is the financial year starting from 1st April ending on 31st March. But since you started from 1st October, that's the problem. If you had started from 1st April, it would have ended on 31st March. You started only from October, not from April. The payment started only from October. You paid for 1 year, that means till next October. Before that, the year ending is there. The financial year will get over on 31st March. So we are paying, this is actually for the next year. The 6 months is for the next year we have paid, that is in advance. Okay. From April till October, you can't include October, it's still September. So for 6 months we paid in advance, that's called prepaid. Now this term outstanding expense, the term outstanding is familiar to you, isn't it? We usually say like outstanding student, but here the term is different. Outstanding expense means, we'll take example and then we'll see the meaning. Suppose in your firm you have employed a chartered accountant, a CA. What's the job of chartered accountant? He has to check your financial statements. That is the process called auditing. So chartered accountant performed audit work in your firm Audit work means he checked your financial statements, he ascertained the profit and loss, he communicated it to the users, all these work he did. So we have to pay him a fee, that's called audit fee. The firm has to pay him his fee, that is audit fee. He completed his work, everything he finished, but we didn't pay the amount. We told him that we'll pay him on a later date. That is the meaning of outstanding expense. That is expense which is incurred but not paid. Incurred but not paid means, see, he completed his work. That means we are supposed to pay him his fee, audit fee, but we didn't pay. That is called incurred. He completed his work means you have a liability to pay actually. That's called incurred. But we are not paying right now. So that is called outstanding expense. Expense incurred but not paid is called outstanding. Example, you can write this auditor's case. Okay, next we'll discuss the term. So that's the classification of expense. Next we'll discuss income. Income is also a very familiar term to you. Income means which we are getting. So income, you can call it as profit also, but again profit, there is a slight difference specifically when you say this term. Okay, income in a way it can be termed as profit. So income means profit earned over a period of time. Usually the period is for 1 year we are calculating. We are always following that financial year. So every year we will be calculating. So profit earned over a period of time is known as income. And you can give the formula for income as revenue minus expense. Revenue minus expense. So usually you will use all these terms interchangeably. Income and revenue will use interchangeably, but again there is a slight difference between income and revenue. We will see that what's the difference. Suppose you have spent, that is cost of goods sold. It's called cost of goods sold. For selling some goods you spent say for rupees 20,000. And you sold, will you sell it for 20,000? No, you will be selling it for 30 or 35. That means you will be selling at a higher value, then only you will be getting an income or a profit. So cost of goods sold, the expense is 20 and you sold it for 30,000. We'll apply in this equation now. Here what is revenue? This sale value 30,000 is called revenue. Expense means this cost of 20,000. So what's the difference we are getting? 10,000, and this is called income. So I hope now you have understood the meaning of revenue and income, the difference. Revenue means it is the complete sale value. Income means it is the difference between the revenue and expense, and income we can call it as profit also, but it is a broader term than profit because income includes, though it can be called as profit, it's a broader term than profit. It includes profit from operating activities and it includes profit from non-operating activities. So you need to know what is operating, what is non-operating. Operating activity means the main activity. What is the main activity of every business? Purchasing and selling of goods and services. That is their main activity. So the profit which you get from your sale of goods and services like this, that will be included under the term income. Other than that, profit from non-operating activity means sale of fixed assets or the interest which you get on your investments like FD. On your investments what you earn, all these are non-operating. Non-operating means it's not your main activity. Main activity is purchase and sale of Purchase and sale of goods. And we know that there is a difference between goods and fixed assets. This is current and that is fixed in nature. It will be there for more than a period of 1 year, fixed assets. So here it is sale of goods or purchase and sale of goods. That is the main activity of every business. It will happen again and again. We have already discussed all this. Now, non-operating means sale of fixed assets. Are we going to sell a building every year or within a period of 1 year? Every month will you sell fixed assets? Will you sell building? Will you go and sell land every month? No. Whereas goods will be sold every month, every day you will be selling, because that's the main transaction of your business. So, non-operating means which is not your main activity, but you will be getting income on that also, isn't it? When you sell a fixed asset, suppose you sold a land after using it for 5 years, you sold it, you will be getting an income. That is also can be termed as a type of profit for you. So, income is a broader term, though we call it as profit also. It's a broader term than profit. It includes profit from operating and also profit from non-operating activities. So, non-operating means not the main activity. The FD, the savings which you invest in your bank, or the FD which you open in a bank, on that you are getting interest. But is that your main activity? No, that is not your main activity. As part of savings, you are investing in bank and you are getting income on that. That's called interest on FD, but it is your non-operating. So, what you get from non-operating will be also included under the term income. Now, we will see what is the difference between profit and gain. Now, already we discussed these two in this term income. So, I will explain what is profit, gain. So, we are using all these terms interchangeably: income, profit, gain, all these from a layman's point of view, everything is same. But for you people, for commerce students, there is a slight difference between all these. And you must understand all these, don't go and by heart this, you will get confused. Yes, so income means it includes profit from operating and non-operating. So, it's a broader term. Now, profit means what you get from operating. Profit means what you get from only from operating. Though you say income and profit as same, I already wrote income can be also termed as profit because it includes profit from both activities. But specifically when they ask you what is profit? Profit is the amount you get from, only from, you write only from operating activity. And what is your operating activity? The purchase or sale of goods. Now, gain means the profit which you get from non-operating activity. That is the meaning. And profit plus gain together it will be termed as income. Separately, how will you refer? Profit means only from operating activity. Gain means what we get from, basically from non-operating, like sale of fixed assets or interest on FD. Understood? So, that is the meaning of income, profit and the gain. Then we discussed revenue also. Income and revenue, again there is a difference. Revenue means the total sale value. Income means the difference between the sale value, the revenue and expense. Now, there is one more term which we need to discuss in this chapter. That is, finally it is loss. Understood? Income we discussed. Reverse we will write for loss. That is expense minus revenue. The reverse of income you can write for loss. Loss is the difference between expense and revenue, or expenses of a period over revenue of that period. That's the meaning of loss. You can write the same example, just make the expense as more. You write cost of goods sold as 35,000 and revenue as, yes, 35,000 is your cost of goods sold, revenue you write 20,000. So, the difference is 15,000, that is called your loss. Understood? So, it is just the reverse of income. And what can be the explanation for loss? Loss includes loss from operating activity, just like income you write operating activity, and it includes loss from non-operating also. Operating activity means purchase of, when you discuss loss you can't say about sale, it is like purchase of goods. When you purchase goods, the loss incurred, that is loss from operating. Then loss from non-operating means when you purchased fixed assets like land, building, furniture. When you purchased all these, the loss incurred will be termed as loss from non-operating, just like income. This is the reverse which you can write. Okay, so with this the chapter basic accounting term is over. All these terms are very important. You must know the exact meaning. No need to by heart, you can write in your own words, but the explanation must be correct and the keywords must be there. When I say operating activity and all, that word you must specify in your answer also, but other than that you can explain in your own words. So understand all these terms and then study, don't by heart.